To start off with, as I said, I'd like to talk a bit about Freddie Mac, and we are a unique company. We're one of the few private companies that are chartered by Congress, and we really focus on one business. We have one business direction, one business model, and that model is to ensure that there is an adequate and constantly functioning finance system for housing in the United States, both rental housing and home ownership housing. Our relationship with American Finance House, LARIBA, is primarily on the single-family housing finance side, and both Sabre and I, that's the area of the organization that we work in and we focus on, is single-family homes. We provide liquidity that supports lenders such as American Finance House's residential programs, residential finance programs. It's important to know that we do not originate any financing contracts. We do not deal directly with consumers. In a very real sense, many people in this room will not be familiar with that there's a Freddie Mac functioning throughout the country, and as I walk through my presentation, you'll see that we, as one of the leaders in the secondary market, have a very dominant role in ensuring that there is always available housing capital in the United States, and that really began for us in 1970. Our original role in 1970 was to provide an outlet for the thrift industry, the S&L industry throughout the country. At that time, I remember I was entering the workforce in 1970. There's only one or two people in the room here that do remember those days, but I will share that with all of us. And those are the days in which mortgage money would dry up and become available. Capital mortgages would be available in one part of the country and not another. And the savings and loan industry was the foundation on the U.S. financing system. And we were formed to provide an outlet for that industry to the secondary market, and that was our first effort, and we were established. I was entering the workforce then. And over time, that role evolved. And by 1989, we moved to become a privately owned stock owner corporation with a congressional charter. And we served all segments of the housing finance industry, from mortgage lenders, mortgage companies, the thrift industry, commercial banks, credit unions, a broad array of housing industry players. Our role evolved to link the mortgage origination market with global capital markets, and that's the role we play today. I'd like to share with you an outline of our role in that market and a little bit of a brief background on what we've done in the past year to put it in context. 2001 was a very busy year for us. We had our highest volume both in the single and multifamily side, and this was indeed a challenge to maintain this level of financing in the midst of an economic downturn, or some of us would call a recession, which we talked about earlier today, but we had our best year ever in spite of the economic downturn. And many of you have known, we had talked earlier about the cyclical nature of housing and cyclical nature of the economy in the United States, and traditionally housing, unfortunately, leads the way into a recession and often leads the way out. In this recession, the housing finance system didn't enter the recession, and in fact we remained strong at the beginning and stronger at the end, and had a very strong year. The mortgage origination volume in the year 2001 was $2.1 trillion. Our new business purchases during that year were $384 billion, which was our largest year. It was really driven by high levels of refinance, home purchases, and first-time home buyers entering the market. As we look back, there has been a revolution in the way that homes are financed in the country. Like other industries, mortgage market is being transformed by the tremendous impact of globalization and technology, and I will talk a bit about that in my presentation. Indeed, in many ways, financial services industry is at the forefront of these trends. I believe that America today, in fact, the housing system works so well, we often take it for granted. Most people take for granted the widespread availability, and Mike talked about this, of 30-year fixed-rate financings, even in the most volatile market. That's not the case in many other countries around the globe, and as we look back as recently as 25 years ago, that was not the case in the United States. 20 years ago, mortgage interest rates were twice what they are today, and the primary source of mortgage money was deposits in the thrift industry. The country was in the midst of a deep housing recession. In sections like the Northeast and the Midwest were rich in capital. I think a lot of you know now that I'm from the Northeast. When you hear my voice and you say, that guy's probably from New Jersey. If you go a little bit further up, this is a Boston accent. Sections like the Northeast, while the growth in areas like the West, in Pasadena and elsewhere in California, which were strong growth areas in the South, lack capital, and mortgage rates would be higher in the West and the South, and capital availability would vary throughout the country. That was the state of the country in the 1970s. A vastly fragmented housing finance system, primarily dependent upon the thrift industry. In the early 1980s, President Reagan convened a commission to look what could be done. And the commission really came to the conclusion that we could not have a one-legged housing system. We couldn't be totally dependent on the thrift industry. And Freddie Mac was developing through the 1970s and looked to organizations such as Freddie Mac to really be an important part of that whole system. And we were positioned to do that. We had spent the better part of the 1970s standardizing how securities would be marketed to investors and how underwriting and loan processing and standardizing of that so there was a national standard for underwriting and security structuring, and to develop the capacity to originate and close and securitize loans at a massive volume. And we fit very well into it. We were well positioned by the late 1980s when we moved to a stockholder-owned corporation. We moved to an organization that really set up an entirely new system in the way that loans and mortgage financings are processed in the country. And this slide describes that in some detail. We really have two ways of financing. One is a securitization structure in which we purchase loans for cash, and the other is a securitization structure in which we swap loans for participation certificates. A key to this, and underlies a lot of the discussions this morning, is that a financing system evolved in the United States that is highly competitive, transparent to consumers who participate in it, and has standard business terms that all parties to the transaction can understand. And that rings through to a lot of the things that we discussed this morning in terms of what we're looking for fairness in a relationship in a financing. All parties to the transaction should understand its terms clearly. There should be strong competition and fairness of rates, that competition creates those rates in standard business terms. And the outgrowth of the system that is developed in the country really leads us to that, where a consumer will pick up a paper in the morning and know what the business terms are. There will be the same business terms that I will use in closing a loan in Virginia as you would use in closing a contract in California. But getting back to these presentations, the securitization structure, what we do. We will buy a financing contract from a lender throughout the country. We can buy it in as small as 1 loan or 5 loans. And under that structure, that loan, that financing contract, the lender will receive cash for it. In the other structure, the cash approach is about 20% of our business. The other structure is a structure in which we will buy loans and contracts in high volumes from lenders throughout the country, and the lender will swap that loan for cash, which is a AAA security. We as Freddie Mac will guarantee timely payment under that loan to the eventual investor. That becomes a very liquid transaction that can be used throughout to either sell that security and create more cash, more liquidity, or for the financial institution to hold it on its balance sheets. That sounds very confusing, but here's a graphic illustration of it. Effectively, a homeowner enters into a financing arrangement with a lender, as you look at the right side of the screen, closes a transaction, and in the loan and the payments on the loan are remitted to the lender, who in turn remits those loans to Freddie Mac. And we will send cash back to the lender, so the lender's whole again. The lender can then go on to the next financing transaction. We then take thousands of those loans and we'll pool those loans into a security that we as Freddie Mac will issue to an investment bank and use an investment banker to market that in Wall Street, and it will go full cycle to bring Wall Street to Main Street is the term that we use, that the transaction is cyclical. Loans are being purchased by lenders. Lenders are selling us the loans. We're remitting cash to the lender, and then we will pool all those loans in a security and create a cyclical structure. The next is the securitization structure, which is about 80% of our business, a little bit of a hybrid of it. Rather than Freddie Mac being in the position of issuing the security and marketing and through an investment banker to Wall Street, we will take the loans and swap those for a security with the lender, who will then convey the use of security and either hold the security on their balance sheets because there's less capital required to be held against that security, or they will market it in the secondary markets through an investment banker and again create cash for the financing market. That's really the nuts and bolts of Freddie Mac's role. We're not a direct originator of any financing in the marketplace. Our customers are American Finance House, Wells Fargo Mortgage, and the mortgage industry in general. And I'd like to share with you a bit about what our vision of the future is. And it's really bringing those capital markets to Main Street and using technology and other vehicles to drive down the cost of housing for consumers throughout the United States. And the vision is to constantly find better ways to appeal to investors, create different types of financing structures. We currently have securities that are marketed in euros in the European market. We market aggressively in the Far East and in the Middle East. So we're opening up the global financial markets to the needs of consumers in the United States. With all of that, we're really creating, through our automated underwriting systems and technology advancements, a system in which there'll be really one link between the consumer and Wall Street and the ultimate investor, whether that be a pension fund in New Jersey or Middle East financial institutions. By attracting the global capital markets and using new technologies to deliver it to mortgage lenders as efficiently as possible, we're reducing mortgage costs and saving families billions of dollars. Where we're going in the future. American families need an additional $6 trillion over the next 10 years to finance the housing needs in the country. And we will play a vital role for generations to come to open doors to home buyers who are more likely to be low-income, minority, immigrant borrowers, and individuals eager to achieve the American dream. And Sabe will talk a bit about that in his next presentation. It's a key business goal and a business objective for us in this mission. As part of that, in developing our relationship with American Finance House, we recognize that there are barriers for many Muslims in achieving home ownership in the U.S. And we really see it as a key aspect of our business is to find ways to remove those barriers and to work with American Finance House, LARIBA, and other organizations in the country to find ways to complete our program and make them available to all our residents in the United States and ensure that everybody has full access to the best housing system in the world. I've really enjoyed this. It's been a great opportunity. I hope you found me as entertaining as you would if I were the real Jim Carey. And it's been my pleasure to be here today. Sabe will continue the presentation with this slide, and we'll be available to answer questions at the end of the presentation. Thank you.